Welcome to the deep dive. Today we're laser focused on Pop Mart International Group Limited. You know, the entertainment and lifestyle company behind those really popular designer toys and collectibles.
Hmm.
You, as an investor, sent us some recent reports, and, well, our mission is to basically pull out the key financial takeaways for you.
Right. And the headline figures alone are quite striking.
Absolutely. For the fiscal year ending December 31st, 2024, I mean, RMB 13.04 billion in revenue. That's a huge 106.9% year-on-year increase.
Huge. And the profit.
Adjusted net profit of RMB 3.4 billion. That's jumped 185.9%. So yeah, let's get right into what's actually driving these numbers.
Yeah, for an investor, those top-line figures immediately grab your attention, definitely. But yeah, it's crucial to understand the performance across their different product categories. That helps assess, well, the sustainability and the breadth of this growth.
Good point. Okay, so diving into those categories. Figures are traditional mainstay, right? They generated RMB 6.94 billion. That's a healthy 44.7% year-on-year increase.
Still the biggest slice.
Exactly. Still makes up the largest portion of their revenue at 53.2%. So yeah, the core business remains pretty strong.
Yes, that steady growth in their flagship figures category gives them a solid base. But the real acceleration seems to be coming from other areas, which indicates some successful diversification.
Oh, you can say that again. Plush toys saw just phenomenal growth, reaching RMB 2.83 billion in revenue.
That number is staggering.
It really is. A 1,289% increase year on year. It now contributes, what, 21.7% to total revenue? That kind of shift, well, it demands a closer look for any investor.
Indeed. That dramatic expansion in plush toys suggests a very effective strategy. They're tapping into new consumer segments or maybe just different preferences. For an investor, this diversification can be a really positive sign of adaptability, growth potential beyond their initial core products.
And it wasn't just plush either. Their premium mega collection also delivered strong results. RMB 1.68 billion in revenue, which is up 146.1% year on year.
Right, so their higher price stuff is also finding traction.
Yeah, exactly.
And the growth of that mega collection, it demonstrates their ability to successfully market and sell higher value items. That potentially increases profit margins, and caters to a maybe different segment of the collectibles market.
Makes sense. Even their derivatives and other products segment showed impressive growth. It climbed to RMB 1.59 billion in revenue, a 156.2% year-on-year increase. This kind of broad-based growth across segments is something investors really like to see.
Precisely. Diversified revenue streams can provide more stability, more resilience to a company's overall financial performance, reduces dependence on, like, any single product type.
Okay, so let's talk about the power behind these products.
Yeah.
Their intellectual properties, their IPs.
Key asset.
Totally. 4 key IPs. The Monsters, Molly, Skull Panda, and Crybaby each generated over RMB 1 billion in revenue. That's a pretty clear indicator of brand strength, isn't it?
Absolutely. For an investor, these billion RMB IPs represent significant assets. Their continued success is, well, crucial for sustained revenue generation and also for future product development.
And beyond just products, their operational expansion is also a key factor for, future growth. They increased their physical store count to 130 and now operate 192 robo-shops.
Expanding that physical presence.
Yeah. Increases accessibility for consumers.
An all-larger physical footprint can enhance brand visibility, facilitate customer engagement, provide additional sales channels. All important considerations for an investor assessing growth potential.
And their international expansion seems to be gaining real momentum, too. They've entered markets like Vietnam, Indonesia, the Philippines, Italy, Spain.
Some big markets there.
Yeah, with notable locations, including, get this, the Louvre in Paris and Oxford Street in London. That really signals global ambitions.
Definitely. Successful international expansion opens up significant new markets and, crucially, reduces reliance on domestic sales. That's a key factor for long-term growth and diversification of risk for investors.
So, okay, let's bring in the experts. What are the analysts saying about all this? Their perspective is obviously vital for investor sentiment.
Well, according to the reports we looked at, PopMart's 2024 revenue actually exceeded analyst estimates by 6.7%.
Okay, beat expectations.
And their earnings per share, their EPS, also surpassed forecasts by 15%. So yeah, this outperformance against expectations is often a positive signal for investors.
And looking ahead,
revenue is projected to grow at an average annual rate of 26% over the next 3 years.
wow, 26%.
Yeah. That's a strong growth outlook, especially when you compare it to the 18% forecast for Hong Kong's specialty retail industry overall.
Right, so outperforming the sector forecast.
That projected outperformance suggests analysts see inherent strengths and, competitive advantages in PopMart's business model.
And the overall rating.
The consensus analyst rating is a buy, with a really significant chunk, 82.86%, rating it as a strong buy.
Okay, that's very strong confidence.
It indicates strong confidence in the company's future prospects from the financial community, yeah? Such a high proportion of strong buy ratings can be interpreted as a strong vote of confidence in the company's management and future potential.
What about price targets? Any figures there?
Yep. The average price target for the stock is HK $159.83. There's a range, of course. High estimate is HK $208.29, low is HK $123.29.
Okay, so that gives investors a benchmark, a range for potential valuation.
Exactly. These price targets represent analysts' expectations for the stock's future value, although, it's always important for investors to consider the range and the underlying assumptions behind those targets.
Good point. And other growth projections? Earnings, maybe?
Yeah, they also project an average annual increase of 28.5% for earnings and 23.5% for revenue over the next 3 years.
Still very robust figures, points towards continued strong performance.
Definitely. These projected growth rates in both earnings and revenue just further underscore the positive financial outlook being presented by analysts.
And analysts attribute this success partly to what specifically?
Well, partly to the blind box model, which we can touch on more, and also the popularity of specific characters like Labubu, especially, it seems, in Southeast Asian markets.
Ah, okay. So that character resonance is key.
The blind box mechanism is definitely seen as a key driver of repeat purchases and customer engagement. And the popularity of specific characters just highlights the strength of their IP portfolio.
Right. But it's worth noting, the reports do include that cautionary reminder, about potential market volatility and the sustainability of these current trends. Investors should always consider these factors.
Absolutely. While the current performance is strong, economic conditions and consumer preferences can shift, that always introduces an element of risk that investors need to be aware of.
Okay, so let's try and recap the key drivers of this really rapid growth. The blind box concept seems central, fueling repeat engagement and a dedicated fan base.
Definitely. That element of surprise and the collectability aspect of blind boxes create a unique and often compelling consumer experience.
And they've successfully positioned their figures as high-quality, designer, limited edition collectibles that helps justify the price point, right?
Right. This strategic positioning appeals to a perhaps more discerning customer base and really elevates the perceived value of their products.
Their popular characters and collaborations with artists are also central to their brand appeal and market reach.
For sure. Strong IPs provide that emotional connection with consumers, and collaborations bring in new creative energy and, broaden their appeal.
And that diversification we talked about into plush toys, various figurines, the premium mega collection that caters to a wider range of consumer tastes and budgets.
It's a multi-pronged product strategy. Reduces reliance on a single format, lets them capture different segments of the market.
Then there's the retail footprint. Their expanding network of physical stores and robo-shops in high-traffic locations increases product accessibility and brand visibility.
Yeah, strategic physical presence complements their online sales efforts and enhances overall brand engagement. Can't underestimate that.
And the successful expansion into international markets is obviously opening up new growth opportunities beyond their domestic base in China.
Critical for long-term growth. Global expansion diversifies their revenue streams and reduces their exposure to any single regional market.
Plus, they seem to have built a strong community of collectors, amplified by effective social media engagement. That fosters brand loyalty and organic growth.
Oh, definitely. Cultivating a strong online community is crucial in today's digital age for building brand advocacy and ultimately driving sales.
They also use innovative marketing strategies, exclusive events, limited releases that generate excitement and maintain consumer interest.
Yeah, those tactics create a sense of urgency and exclusivity, which are really powerful drivers in the collectibles market.
So ultimately, their strong 2024 financial performance, with that significant growth and improving profit margins, it just underscores the effectiveness of their whole business model.
Absolutely. The financial results provide concrete evidence of the success of their strategies and their ability to generate increasing profitability.
So for you, the investor, the key takeaways seem pretty clear. significant revenue and profit growth driven by these popular IPs, successful domestic and increasingly international expansion, a very positive analyst outlook, and this unique blind box model that keeps customers engaged.
In summary, yeah, PopMart presents a really compelling picture of strong financial performance and strategic growth within the entertainment and collectible sector.
Okay, so given this impressive performance and expansion, what are maybe the most critical factors an investor should monitor going forward, to assess the long-term sustainability of PopMart's growth trajectory in this evolving global collectibles market? That's maybe your question to consider. Thanks for this deep dive.